Good afternoon, everyone, and welcome to COL Conversations, our webinar series that brings you closer to the leaders of different businesses and known experts in markets and investing. I'm Marvin Fausto, President of COL Investment Management, and today we will have a quite interesting conversation with the people behind Citicore REIT or CREIT. This REIT is particularly interesting because this is the first time we will have a solar power generator as tenant compared to the other REITs that we have in the market that leases to offices. In this conversation, we will try to understand how that model works, how stable or risky the rental income is, and have a better appreciation of its growth potential. The key people behind the sponsor or Citicore are the people behind Megawide, the company that has one of the largest construction portfolio in the country. CREIT is offering their shares via public offering, IPO, the primary and secondary shares, and hope to raise 6.4 billion for the REIT's expansion. Allow me to introduce the people behind REIT, the CREIT. It's led by Mr. Edgar Saavedra, Chairman of the Board, Citicore Power. Edgar is the founder of Megawide and has more than 20 years of experience in engineering and construction straight out of college. He led the company from a mid-sized construction firm to one of the largest and diversified engineering and infrastructure innovator. Megawide operates the internationally awarded Mactan Cebu International Airport and the country's first land port Parañaque Integrated Terminal Exchange. He will be joining us later in the Q&A. But to give the presentation, let me introduce their president, Mr. Oliver Tan, their CEO of Citicore Power Group also. Oliver joined Megawide in 2010 as Chief Financial Officer and led the deals for various public partnership projects with the government, including the construction of schools, Mactan, Cebu International Airport, and the Parañaque Integrated Terminal Transport. In 2018, he focused on the rapid expansion of Citicore's business, applying his experience in corporate finance, strategy, and building infrastructure business. So, ladies and gentlemen, let us all welcome the people behind CREIT.
Thank you, Marvin. And good afternoon to all the COL investors and attendees in today's webinar. We are excited to share with you details and the framework of the first renewable energy REIT in the Philippines, Citicore Energy REIT or CREIT for short. Citicore Energy REIT, the issuer, intends to sell up to 2.5 billion firm shares comprising of 1 billion primary shares, 1.13 billion secondary shares, with an over-allotment option of 327 million shares, equivalent to an offer size of 6.4 billion pesos or 38.3% public float, assuming the over-allotment option is exercised. At 2.55 pesos per share, indicative yield is 7% for 2022 and 7.4% for 2023 projected earnings. Use of proceeds will be used by the sponsor to partially fund its robust 1.5 gigawatt pipeline projects, which I will expound in the succeeding slides. CREIT's differentiation compared to the traditional property REITs is its unique lease framework structure. Post-offer, CREIT as the landlord will have an initial leasable land portfolio of 1.98 million square meters, and in addition to the land asset, CREIT also owns a 22.3 megawatt solar power plant. These land parcels are strategically located in next wave cities, suitable for township development in the future, but are currently leased out to operating solar plants with a combined capacity of 145 megawatt. The tenants, which essentially are the power companies, operate the solar plants and sell its electricity output to the government, to its customer, the government, via a long-term feed-in tariff program, and diverse and reputable private customers. These power companies or tenants pay 95% of its power generation EBITDA to CREIT in the form of a guaranteed base annual lease. To smoothen the volatility in the base annual lease, as it is pegged to 95% of the power generation earnings of the tenants, CREIT derived the 2021 base annual lease from 5 years historical EBITDA average of the tenants and escalated year on year thereafter. The base annual lease is guaranteed because it is independent of the actual performance of the solar plants. The CREIT also stands to receive a variable rental from the lessees equivalent to 50% of the incremental gross revenues earned by the lessees from any excess of actual energy generation over its base revenues. Essentially, the unique lease structure provides downside risk protection and upside participation to the CREIT's investors. Moving on to the key investment highlights, CREIT is a unique REIT asset class with green portfolio. CREIT enjoys stable occupancy rate all year round. All the solar power plants have efficient operational track record. The sponsor has a robust 1.5 gigawatt pipeline projects that it shall feed to CREIT in batches to grow the asset portfolio and earnings of the REITco. And lastly, CREIT, as rated by Oslo-based Cicero, the first dark green ESG rating in Southeast Asia, is a sustainable ESG investing. Allow me to discuss in details the key investment highlights in the succeeding slides. CREIT has a unique asset class with a green portfolio. CREIT's portfolio of leasable land assets are geographically spread over Luzon, Visayas, and Mindanao in regions with high solar irradiation, as seen in the heat map of the Philippines. The 7 tenants are forecasted to contribute 1.35 billion pesos in lease revenue this year. Toledo property in Cebu contributes the largest lease revenue at 27%, followed by the Clark Solar Power Plant at 21.7%, and the third is from Silay property in Negros at 20.8%. Bulacan and South Cotabato, both properties combined will contribute 22% of total lease revenue. CREIT enjoys stable occupancy rates all year round. CREIT's occupancy rate will always be 100% over a long-term horizon, unlike traditional property REITs that are inherently exposed to vacancy risk as tenants come and go. The lease contracts terms with the power company tenants ranges between 19 to 25 years, with provisions for renewal for another 25 years, resulting in weighted average lease expiry of 20.8 years, the longest WALE compared to other REITs in the market, with an average WALE of 5 to 7 years. CREIT's tenants have long-term offtake agreements with a diverse customer base, eliminating any heavy dependence on a particular industry or sector. 27% of the total contracted capacity of the lessees have a long-term feed-in tariff rates with the government through the National Transmission Corporation, or TransCo. The rest of the CREIT lessees capacity are contracted to various blue chip and multinational companies as its customers, such as AC Energy, Shell Energy, Freeport area of Bataan, and various industrial parks in the country. If we look at the lessees customers offtake contracts, you will see that their customers' WALE is at 7.3 years, also longer than the WALEs of other REITs in the market. CREIT's lessees offtake contracts have a good balance between long-term, providing stability, and short-term, providing flexibility. 69% of the offtake contracts are to be renewed beyond 2025, while 31% of the offtake contracts are for renewal every other year. The lessees customers with short-duration offtake contracts have been renewing since 2017 and have undergone 2 to 3 renewal cycles to date. The lessee likewise enjoys a right to match price privilege by virtue of its good long-standing relationship with these customers. Even in the worst case of non-renewal, CREIT's tenants are able to sell their electricity output through WESM, as they enjoy right of first dispatch, dispelling any stranded output and thereby protecting its revenue stream and its ability to pay its lease obligation. As seen in the Western price chart, 5 years historical solar weighted average spot price is at around 4 pesos per kilowatt hour. The same tariff rate assumption we use in the guaranteed base lease calculation. Anything above 4 pesos per kilowatt hour that the lessees can sell will form part of the incremental revenues to be shared to CREIT in the form of the variable lease component. The solar power plant tenants have highly computerized and efficient operational track records. All our solar plants have a design life of 30 years, extendable by another 25 years. The real-time performance monitoring SCADA system and the computerized maintenance management system allows our solar plants to have unparalleled operational reliability. This, coupled with our experienced in-house solar operation and management team, have achieved consistent plant average availability ratio of 98.2% and plant's average performance ratio of 83.3%, higher than industry standards. Our solar plants have survived 4 super typhoons already, including the most recent Typhoon Odette, where the damages caused to our Toledo Cebu plant was minimal. As prudent measures, all our solar plants are covered with property and business interruption insurance. The property insurance covers for 100% replacement costs in the event of total wipeout, while the business interruption insurance covers for up to 6 months of revenue losses. CREIT has upside potential with the robust pipeline projects of the sponsor. The sponsor, CREC, will use the IPO proceeds to partially fund its 1,500 megawatt pipeline project. As and when these projects are energized and completed, the sponsor shall infuse these new assets in batches to CREIT to grow the initial portfolio of CREIT from 145 megawatt to 266, almost double in just 1 year. In addition, the sponsor expects to infuse another 195 megawatt of new solar assets by 2023 and 319 megawatt by 2024 to grow the asset portfolio of CREIT 5 times by 2025. The next slide details the various pipeline projects for infusion into CREIT upon completion and commissioning. Lastly, CREIT is a sustainable ESG investing with its agro-solar platform, enabling vegetable crops to grow side by side with solar panels, providing income augmentation opportunities to farmers in the community, providing inclusive growth. Also, its contribution to decreasing its carbon footprint. This ends our short company presentation. For more information, please visit our website, www.creit.com.ph, or email our IR officer at investorrelations@creit.com.ph. Thank you.